Hey guys, what's up? All right, do we have everyone? No. Do we have Emanuele?
We're going to find them.
We're going to find Emanuele. All right, so good evening, everyone. It's a pleasure to talk. I'm repping today the Anon Builders, so shout outs to the Anon Builders. I hope you guys are having a good time today. How was your lunch?
It was good. So funny enough, I'm sorry, but my pants ripped as I was walking here. I was next to him, so if anyone saw my leg, I think it was like a gift from God. They're like, you're going to go on stage, we're going to rip your pants. So it's a good start to the panel. Yeah.
I think that's a good signal, guys.
Yeah, it's a great signal.
So today we're going to talk about a boring topic, stablecoins. Is it boring? No, it's actually not boring, I have a question to you guys, maybe kind of raise your hand. Raise your hand if you have been here in 2017. Anyone? 2017 class? 18? Yeah. 19? Who's from 19? 20? 2021. Who joined 2021? All right, so we have a lot of OGs. So you guys, I think, remember, right? 2017, there was nothing. There was only USDT. And since then, we went quite a big journey, right? So right now, we've got a myriad of stablecoins, lots of questions, lots of usage. So maybe let's kick off. Let's start with the most important thing, guys. So maybe a round of introduction. What do you say?
Yeah, I'll start. Nice to meet you guys. My name is Gabriele Galli. I'm actually from Milan, so it's a pleasure to be here. It's pretty surreal. I studied in the United States, and I never thought I'd be at a crypto conference with so much energy in my hometown. So it's really a pleasure to be here and be on this stage. I lead our commercial initiatives at Mesh, so a lot of our sales, partnerships, and really, when we started Mesh, the theme that we were going after wasn't even crypto focused. We wanted to make financial freedom accessible. And over the years, what manifested itself is focusing on cryptocurrency, blockchain technology, and then recently stablecoins and in the payment space. So we'd been working with a lot of traditional finance institutions like PayPal, et cetera, to really bring crypto and blockchain as a technology and infrastructure and make it globally accessible. So very excited to be here and good to see everyone.
Thank you. Round of applause. Yeah.
Thank you.
All right. Who's next?
Yeah, so on my side, I'm Ioannis Kympritis. Also been based, not from Milan originally, I'm from Greece, but I've been based in Milan for quite a while now and very happy to be here. And on our side, I lead growth at Hercle. At Hercle, very simply put, we're a digital asset liquidity provider, and we started by powering institutional digital asset trading, and now we're doing more and more in the cross-border payment space, powering payments with stablecoins through our, let's say, trading engine and advanced settlement capabilities. So that's us, and very happy to be here and talk about stablecoins.
Thank you. Who's next?
Hey guys, I'm Alessandro. You met me this morning. I'm the co-founder of ETHMilan, but also I have another identity. I lead growth at Transak. I've been there for 5 years. I come from TradFi, actually. I was at Bloomberg, like Emanuele, actually, funny enough. So, yeah, Bloomberg class. And yeah, at Transak, we do payments, B2B2C, B2B, like you name it. Like we help basically companies to get stablecoins and much more. So very excited to dive into this topic.
Thank you.
Hey folks, great to be here. My name is Emanuele Rossi. I lead stablecoin business development at Anchorage Digital. I'm also a fellow Milanese, and such a crazy time to be here in this museum talking about crypto with all of you. Really a pleasure, and something that I would have never thought would have happened a few years ago. So great to be here. Anchorage Digital is a leading institutional digital asset platform. We are based out of the United States of America, and we are still home to the first and only federally chartered digital asset bank in the United States of America. This is a very powerful setup that we have in place. We have essentially a license with a federal regulator, and through this license we are able to provide a wide range of crypto-native services to sophisticated institutions such as custody services, trading services, staking, on and off ramps, and so forth. Specifically at Anchorage, I'm part of the stablecoin business, so focused on all different things related to digital money, stablecoins, payments, and so forth. And we have a lot of interesting opportunities and products that we're working towards this year. So very excited to be here and to share a little bit more about how we think about the market and the stablecoin space.
Thank you. All right, so maybe I'll also say a few words, like the esteemed moderator. I've been like here in DeFi for more than a few years. We happened to even work together with Davide on a certain protocol a few years ago. So I think that's how we met with Davide. And before that, I used to work for like financial company, used to trade FX and rates for emerging markets. It was quite interesting because the year was, like 2016, 17, 18, and already back then, crypto really felt like something that will have a huge use case. Funny story. It's a very niche story, but for example, a lot of like emerging countries like to shut down all the currency movements out or into the countries because of like populism. So quite often, as crypto started to proliferate, we would get like inquiries from the client saying, hey, all my investments are in like certain country, pick up any country, from the emerging countries list. I cannot repatriate my dollars. Guys, do you think I could use local Binance to move money or a local crypto exchange? Or do you think I could like convert everything into stablecoins and move it? It was quite interesting because back then, it's like 16, 17, 18, 19, there was no framework. And we would say, that's an interesting idea, but how do you handle taxes? How do you handle reporting? I've got no idea, but I'm ready to do this because there is no other way, right? And out of this kind of like frustration of how kind of like strange the market was, you see more and more like adoption of stables, right? And I think we can already kick off, right? Because I think we'll like cover today 6 topics. We will talk about the future of these stables, what's going to happen with them, the evolution of them, a little bit about the local currency stables, as well as the stables in the emerging markets, a little bit about the yield-bearing stables, and of course, something about the risk. So let's kick off with topic number 1. So what's gonna be the future of the payment stables, right? Are we going to have a monopoly or diversity? Because think about it, right? For years, we had USDT. Then we had also USDC. We had DAI. Now we have many, many more. It was last week, 2 weeks ago, we had the Plasma event. Hercle went to the stock exchange, IPO'd. So it feels like there's like more and more money flowing into the market. But what's going to happen, right? Are we going to have like one stable dominating or not? What do you think, guys? Maybe let's kick off with Emanuele, right? Emanuele, what do you think?
Yeah, that's a great question. I think to understand the future, we need to look at the past. How did stablecoin get started? They really initially were a tool designed to optimize trading operations within the crypto-native space. Initially all liquidity and trading was denominated in Bitcoin back in the days, and that was not the most efficient way to run trading strategies and just trading operations. So the smart folks at Tether thought, why don't we just build an asset that is compatible with blockchain rails and with crypto systems, but that it's stable and acts as a dollar. That's the idea behind Tether. Little did they know that then Tether would evolve into this massive operation and this product that is bringing financial empowerment all over the world. So it really started as a way to optimize trading with the increase in interest rates during COVID and so forth, this business model became very interesting for many different people, hence why we're all here today talking about stablecoins. Specifically, when it comes to use cases associated with stablecoins these days, I recognize three mainly. One, it's still the support of trading and speculations, either across CeFi markets, so centralized exchanges, or DeFi markets. The second big use case is payments operations, so cross-border payments, remittances, P2P type of payments operation, peer-to-peer. And the third big use case is what I would call access to dollar and saving in dollar accounts, global dollar accounts. So these are the three core use cases that we see stablecoins supporting at this point in time. When it comes to issuers and how many products we will see in the future, there is likely going to be a proliferation of assets and stablecoins. We've just recently seen regulation being close to passing in the United States through the Genius Act, and many large sophisticated institutions, again, are very interested in this very profitable business model. They just need a little bit more regulatory clarity. There is going to be, in my view, two main types of stablecoins that we're going to be seeing. One is a fully interoperable type of stablecoin, a global dollar that can be used across the centralized finance market, centralized finance markets, payments operations, and so forth. The other one is going to be more akin to a tokenized deposit used to run internal operations and to optimize flow of funds within companies. This could be, for example, a JP Morgan token or a Meta token or a Google USD, something like that. For the global stablecoin models, we are starting to see some challengers working towards dethroning some of the incumbents. Of course, Tether and Circle are the biggest two. I would say there are novel business models, for example, such as the one of the Global Dollar Network, enterprise alliance that we, Anchorage, are part of, that has a stablecoin called USDG that is looking to basically reward members of the network and participants in this ecosystem instead of having just one centralized issuer capturing all the incentives and the benefits associated with the stablecoin model. So I think it's going to definitely be a multi-issuer type of future. The question is it going to be a more closed loop type of assets or a more interoperable type of asset? And we at Anchorage, again, our bank, have extensive experience both in crypto native services and now in traditional financial services, and we're looking to support the space for whatever they need. So that's my 2 cents on the topic.
Emma, I have a question. So what do you think? Do you think the monopolies are going to be dethroned? Like USDC, Circle, they went public, their stock is absolutely ripping. USDT, we know how dominant they are. Like over time, what do you think? And what are you seeing at Anchorage? Because I know you guys are touching a lot of these different projects.
Yeah, not to steal the show too much, but I think stablecoins are a game of liquidity in the end. That's why you're going to have these two setups, the global interoperable ones and the tokenized deposit ones / closed loop ecosystem ones. When you think about digital dollars, global digital dollars, the reality is that at this point in time, Tether is king. You go in any emerging market, you go in any company that is looking to move money all over the world. When they think about digital dollars, they think about Tether. Circle is, of course, growing, and this IPO is consolidating, let's say, their position within the stablecoin market. But it's all about liquidity and how embedded you are in this local ecosystem. And Tether has demonstrated that they are, again, the king at that. I think Circle model is the classic stablecoin model, but again, what about the liquidity consideration and the grassroots integrations? I think for that there is space for something like USDG and other newer products to come in and redefine how that incentive distribution takes place, and there is room for competition again for those second spots, third spots, and so forth. But Tether has really built a significant moat when it comes to liquidity, and again, having worked in the stablecoin space for some time at this point, it's all about liquidity. So it's going to be challenging to dethrone the king, but I definitely think there is space and room for growth for other players.
Perfect, thank you. Guys, anything more to add? Because it's a very deep topic, so I think we can still have a few minutes to cover it.
Yeah, absolutely. So from my standpoint, first of all, I think we should define what a monopoly means. First of all, like if you look at global trade, about 50% of that is done in US dollars. And if you look at stablecoins, today 99.8% it's USD based. So that already is going to change. If there was today like a proper Euro stablecoin, which today is only issued by Hercle, which is an American company, so that's already, you can see like, there are like very interesting entanglements in stablecoin space. Like the biggest stablecoin is issued by Italians, and then the biggest Euro stablecoin is issued by Americans. So like I think that's gonna change. I think stablecoins are a superior means of payments from a platform standpoint. But then like there is gonna be a second generation of stablecoin, and there are like some regulatory challenges for that, which is like a superior type of money, which in my opinion should distribute yield. Because why would I use either USDT or USDC just for the purpose? I'm using that for a platform because it's cheaper to send money. But then like, and there, it's already happening. Like you can see like players like Ondo, they're rewarding users with yield. Anchorage, they're doing that. So that's gonna be a second type of generation, which is gonna challenge the first one. And the first generation, which is Hercle and Tether, they are challenging money and dollars that are sitting in banks. So I think we'll see all of this kind of movement happening. But also now, because of MiCA and the Genius Act, if you really think about it, stablecoins, they're tokenized deposits. And banks have an advantage here because they don't have to go and say, hey, I'm going to build market cap. They already have the market cap. The market cap are bank deposits. So maybe tomorrow they can say, hey, like we are going to tokenize our bank deposits, and that's our stablecoin. So they can go to market pretty much in, I don't know, in 1 year, they can do whatever like was done by Hercle and Tether in many, many years. And then if you think about JP Morgan, I was thinking about this before they announced. Why the hell would they use Hercle? Like Hercle is trying to challenge their business model. JP Morgan is the leader in cross-border payments today. And again, you have other challengers. I'm sure not a lot of you know that Donald Trump has its own stablecoin. It was launched quietly in April, and it's like a $2 billion stablecoin.
What's it called?
It's called USD1. You can look it up. It's $2 billion. And that's private money from Donald Trump. So it's not just, companies that, of course, are going to be challenged by also regulation. Donald Trump itself, while he actually issued his own stablecoin through World Liberty Financial, he also said, hey, but look at Amazon, Facebook. You cannot really issue your stablecoin because it's against like big tech, but also it's favoring banks and it's favoring financial institutions to that. So like what I think is there is gonna be like a lot of competition for the dollar and for dollars itself. So like we will see a lot of European stablecoins. We'll see a lot of local stablecoins. They will challenge the dollars, and for the dollar again, there is gonna be challenges. So I think it's really a race to the bottom, like many of these businesses, and for sure, like I think revenues are also gonna be diminishing.
Yeah, on my side, I agree fully with both visions, and I really like also the vision of having like a dual system model where you have the global stablecoin. But following what Alessandro started mentioning, I would raise the hypothetical question of what if this global stablecoin is not even dollar-based, right? Because especially today with the new regulation that is starting to kick in and the new frameworks in the US market as well, most of the dominant stablecoins will need to hold their treasury bill reserves or cash equivalents with US banks or US-friendly banks at least. And they're also regulated by, or will be regulated by the United States government. So what this means is that these issuers can be closed down at any point in time and are under the control of the US regulator. Right, funds can be frozen because the funds ultimately lie in U.S. accounts, and they're under the jurisdiction of the United States. And then even on the programmable level, tokens can also be frozen because of regulatory scrutiny, for example. So in a world that is fragmenting more and more, and there starts to be this feel, let's say, or this global vibe of non-US dollar dominance, and let's do something else. Maybe the model for this global stablecoin is not even a US-backed one or a US dollar-backed one. The three options that I'm seeing today, one that is a very hot one in the market right now is the tokenization of local currencies. So you bring in tokenized euro, tokenized naira, tokenized whatever it is, and maybe you enable some form of atomic swaps on chain. An argument on that side, I would say, could be, or a limiting factor could be that in pairs that do not have two-way bilateral flow, or a lot of volume that goes two ways, maybe the liquidity is not that strong, and that is a limiting factor of the model. Now, a secondary model, also pushed by various lobbies, like even the BRICS, could be tokenizing a new form of currency. One where this digital collateral is multi-asset and it is pegged to the value of an asset, to the value of multiple local currencies and maybe some commodities and a basket of whatever it is. So here you have a neutral collateral to settle international trade, which certain jurisdictions may be more comfortable with. But a final point that could be interesting is, what if this neutral collateral is in fact Bitcoin? And you're using something like the Lightning Network, which can bring a lot of scalability through this peer-to-peer channel system, but moreover can mitigate the volatility risk of the Bitcoin price because of the speed of settlement that it brings to the table. So I don't know, this is, again, a hypothetical question with hypothetical scenarios.
Yeah, these are really interesting topics. I would love to see a non-dollar backed stablecoin pick up. I live in the States. I think, Emma, you live in the States too. Inflation's real. Inflation's very, very real. So I would love to see something on chain that we could hedge that against that's not dollar backed. I think everyone is gonna have a stablecoin. Like, we work closely with PayPal. I know PayPal, you can consider it like a financial platform, but they're big tech, really, right? Like, they're really pushing PayUSD. And I would expect a lot of the banks in the United States to get into that. And I know that's something you guys talked about. So I agree with what you all said. And yeah.
Perfect. Thank you, guys. I think, because we already covered, and I think that's a quite good place to move to another topic that's already very related to, which is the evolution of crypto payments itself, right? Because who remembers the original Bitcoin pizza? You know, many, many years ago, right? The first time ever when people paid for pizza with Bitcoin. It was quite interesting, right? Because back then, when you suggested that people would pay with Bitcoin, you would be called a schizo or a crazy man. And then the people said, okay, let's buy pizza with Bitcoin. Fast forward, you know, like 10 years ago, people were really kind of like trying to push Bitcoin as a payment layer. So you had, like, you know, Bitcoin coffee, Bitcoin taxi drivers, etc. Somehow we are circling back to like on-chain stables. So let's circle back to this, and let's kind of like talk about the crypto payments themselves. So, for example, how is the landscape right now compared to a few years ago, and how do you think, guys, it will evolve?
Yeah, I can tell you real quick.
Perfect.
Bitcoin pizza was a bad investment.
It was tasty. You know,
I think stablecoins really changed crypto payments. I think volatility made paying for things in cryptocurrency difficult. So, like, merchants, businesses, they do not want to receive a volatile asset, taking on that risk when they're receiving a payment for a good or service. And then even users, right? Like crypto users, crypto investors, people that are holding crypto. Cryptocurrency historically has been more so as a speculative investment. I think blockchain technology has a lot of potential, and of course Mesh, like, we're doing a lot to build around that and revolutionize the payment space. There are a lot of efficiencies. It's faster, it's cheaper, it's programmable, right? So if businesses understand that, it's a no-brainer, and it's a very easy sell. And at Mesh, we're really enabling and looking to bring this into the marketplace so that you can go and buy coffee with Bitcoin. You can book a flight, or not Bitcoin, if you want to Bitcoin, but also like USDC, USDT is stablecoin. If you want to book a flight, you can. And there are a lot of efficiencies around that. The difficult thing is educating people, right? Like, there are compliance hurdles. There are stigmas around blockchain technology that Us that are in it day to day, like we think it's a no-brainer and we really understand these dynamics. But when you're going out and you're trying to convince a WorldPay, an Adyen, to enable crypto as an alternative payment method, or go to an Uber to allow people globally to start paying for their Ubers and stablecoins, there is so much education involved, and that's a really interesting piece. And I think it comes down to volatility. I think reducing the volatility on chain through stablecoins is a first big step, and then we have a lot of work to do.
Yeah, I will argue that actually for someone that has been in this space for a while, not that much has changed, in the past 1 year or something.
Nothing.
What changed is the perception, the regulation, and the liquidity. Because when I think about, hey, someone waking up and saying, oh, stablecoin sandwich, oh, such incredible idea. I mean, blockchain was actually built for payments. So like, it's been there like for ages. And sometimes I feel like you come like full circle, like really, like you start from somewhere which is Bitcoin, And the way I look at this is, on one end, you sort of have like a global currency, the way like Bitcoin was designed, which is volatile, but it's a global currency for payments. And then on the other side of the spectrum, you have kind of Hayek's money. So Hayek was like this like economist, and in 1976 he won the Nobel Prize for like denationalization of money, right? So he thought, okay, we will reach a certain point in late stage capitalism where like every company will issue their form of private money. And like I think today we are like somewhere in the middle. Like private companies are waking up, and like Apple has more liquidity than any other bank in the world. But today they don't have the political power to say we don't want to issue like a currency that is pegged to the dollars, because actually this is what Facebook tried to do a few years ago, and you saw like the impact of that. DM was shut down by the entire political world, because when you say I have the power as a company to issue a currency that is not pegged to anything, and I'm relating to what Ioannis said, that's something you cannot do because it challenges the state, right? It challenges the state as a concept whatsoever. So I think today we are in kind of this transition where like, okay, we picked it up, liquidity is good, you can do certain flows with stablecoins, but down the road, I think really like you can see like a new form of money emerging. So we will see like that's how like the landscape is changing today, because Circle went public, the perception changed. Actually today you can do some useful trades, like you can use stablecoin to do stablecoin sandwich, send money across the world. But again, like this was possible many years ago. Like it didn't happen today. It's just like, as I said, like the liquidity changed, the regulation changed, the perception changed. But I think these ideas have been there for a long time.
Yeah, I agree with everything, of course, ideologically about money and so forth as well. Maybe just from an actual where we were and where we are standpoint, and to put it out there a little bit more formally, back in the days, stable coins for payments were informal ways to move money around, to transfer value and so forth. It was for really the pioneer and those that understood the technology. These days, these flows, this technology has been formalized. There are companies that are solely specialized on moving our money around on behalf of third parties using stable coins, or either on behalf of themselves using stable coins. There is massive amounts of investments that are flowing into this type of businesses, again, relying on stable coin technology. The next step, in my view, is how do we re-architect and restructure traditional financial rails in order to support this technology. Right now, again, many middlemen, many startups, again, crypto crypto native folks are helping us get there to the next level. The next step, as regulation passes, as the technology and the infrastructure become safer and more mature, is about how do we rewire the existing financial system, how do we get the banks to rely on these ledgers and on these assets to move money and value around. And it's already being done in some capacity through tokenized deposits within banks and so forth, but again, how do we create this unified settlement system that is blockchain, that are stable coins? And there are a lot of trickle-down positives for the industry, whether it's reduction in transaction fees, whether it's elimination of middleman fees and optimization of internal capital requirements and so forth. All of this will be enabled by blockchain. It just takes a little bit of time to get there. But again, I think at this point, the adoption and the utilization of this technology has been recognized. And going back to king making and Circle, I think the Circle IPO was basically the pinnacle of this let's say, evolution and hype building. When we think about fundamentals and multiples of circles, again, you can do your own analysis and look at the internal, let's say, revenue distributions model of Circle to understand whether the value is there or not. But I think it's just an expression of the markets and a recognition of the market of how important stablecoins are and will be in the near future.
Yeah, because it's interesting, when companies go public in the United States, it's validation, right? So for Circle to go public and have a successful IPO, for Coinbase to be public, and it's doing well, there's more comfort. Like I was talking about that earlier with one of your colleagues, there's more comfort now because other institutions are working with a publicly traded company that are under certain types of scrutiny and regulation. And I think that's just a symptom of time. I think if you think about it, 2 hurdles: infrastructure, infrastructure continuously needs to improve, and then compliance, right? And understanding the regulatory framework there. Those 2 things, of course, take time to build out. We've saw that with other technologies that have emerged. And so I do think it's a matter of time. And I don't know about you guys, but I think this is going to be one of the key catalysts to seeing a big jump in widespread crypto adoption and usage.
Perfect, guys. Thank you. Ioannis, anything, or do we move over to euros because we've got?
No, I mean there's not much to add. I think everything has been described.
So now we need to give it the topic to Ioannis, and I think that's going to be very, very interesting one because we already touched this, euros and local currencies. So I think first of all, question to you on the public: who is keeping any kind of stables on chain in their wallet? Do you have any stables? And how many of you happen to be earning or actually, spending, not in dollars, but in euros or other currency? Yeah. And that's quite painful, right? Because no euros, no yens, no other dollars. It's only dollars, right? So even in Europe, right, we are the hard times because every single time something happens, we need to exchange one and the other way, right? So let's kick off maybe with the question, right? What's up with the euro stables? Why is USD running supreme? What about regulations? And even further, let's think about it, right? Why do we even using stables outside of Europe, but in the emerging markets? And also, do we see the same? What is the reason for this dollarization? And could we ever see local stables there?
Yeah, I mean, maybe I started in the reverse, so
Perfect.
to touch a bit more on the emerging market side. So you asked the question of why stablecoins. So what are the issues that are currently faced in various of the emerging markets? One, you have very high currency volatility and strong currency devaluation against other currencies. 2, you have very strong capital controls that I think somebody mentioned beforehand in the discussion in certain jurisdictions where it is less easy to move value out of the country because it is restricted by certain governments via monetary policy. And then at the same time, you have very costly means to go through the traditional financial system and to run cross-border payments. And those means are also very slow usually, where you may be settling transactions in T+2, T+5, T+8, or never in case it gets blocked for some random reason in some correspondent bank. So with these issues that you face in emerging markets, the use of stablecoins falls under two umbrellas, in my opinion. One is that of value preservation, and the other one is that of value transfer and payments. So the value preservation side, which Emanuele mentioned before, I think was the first case post stablecoin usage for pure crypto trading, where various people in emerging markets realized that they were losing a lot of value, getting stuck in the local currencies. And stablecoins was a means to enter into a stronger currency, let's say, relatively speaking to whatever they have, and preserve value and store value in a US dollar-backed form of an asset, right? Now, as time progressed and more people become comfortable storing their value in stablecoins and sitting on stablecoins, they start transacting also between themselves. Merchants, through various fintechs that evolve in the market, start getting more comfortable to accept these stablecoins as well, and the liquidity starts circulating internally within that specific economy, rather than just sitting there and having value getting stored. Now, on the other side, on the payment side of things, I think we already have explained a bit how it works. So it's the classic stablecoin sandwich, as we said, where you are taking out the correspondent banking system on SWIFT, putting blockchain in the middle and connecting two real-time payment systems that are local on the one side and on the other side, in order to have faster, more efficient settlements and way more cost-effective. Where can this add value? It adds value in international trade payment settlement, where today if you have emerging market to emerging market trade, many times it still needs to go through correspondent banks in the US or some US-friendly Western jurisdiction, let's say, which implies more time, more risk of funds getting blocked for some regulatory or compliance reason, and then more cost as well. So by replacing that with the stablecoin sandwich, you can settle payments a lot faster, which increases the cash conversion cycle of the companies as well, and it makes the process a lot more efficient for the companies that are doing international trade. You have the same effect in remittances, where a lot of the emerging markets, their economies are very reliant on remittance flows, where people are working, for example, in Europe and sending back money to their home every month. By going through stablecoins, that is something that is a lot faster and a lot cheaper, so it increases value in the local economy. And finally, you have what is called cash repatriation, where there are a lot of large multinational entities that may have certain subsidiaries in emerging markets. They generate economic activity and value there in the local currency, and they need to move those assets or that revenue generated back into their mother entities. Now, in certain emerging markets where you have both capital controls and high volatility, it is very hard to take the funds out of those local markets, and also you're losing a lot of value because of the currency devaluation. So with stablecoins, you get the opportunity to move funds out from a parallel market and avoid these FX restrictions and these capital controls. Because it is sort of a regulatory arbitrage today. In some markets, there still simply isn't the regulation for stablecoins. There aren't any restrictions. So people avoid, they do this regulatory arbitrage and they avoid the current controls through going through this parallel market. And that is generating a lot of flow, I think, as well.
Thank you so much. I can only just share my personal anecdote. The year was 2019. We were once trading from dollar to Thai bahts. That we meant to send to Cambodia for like a very specific client. The money got lost somewhere. Every day for 20 days, I would call a bank in the center of middle of nowhere in Cambodia, and then wait on the voicemail, and they would play some kind of like brain rot music for 5 minutes. Beautiful times. So yeah, that's like very bullish on stables, because at least now you know where the money is, because back then it was over. So guys, anything to add on the EM or euros, because we have also euros? Go for it.
Yeah. So on euros, first I would like to start with the positives. So actually the fastest growing stablecoins today are euros. So, but again, one is from an American issuer, which to me like doesn't resonate as a European, and the second one I think is Stasis Euro or something. I think there are like a variety of reasons. First of all, I think as Europe, as the European Union, you should be like politically intentional about pushing like financial innovation. And I think the US basically they realize that whoever is gonna buy my debt is welcome, right? So Tether has more bonds than Germany, okay? So, and I think in this political and historical moment, it's very important to have buyers of your debt. And in Europe, we were like very slow, and we still didn't pick it up. That as through stablecoins, you can have more buyers of your debt, and I think that's like that kind of mental shift still needs to happen. So I think that didn't happen, and you can see like examples of this. For example, in the digital euro, the digital euro would have been like a great opportunity. You could have said, okay, I'm gonna let private issuers distribute the digital euro on chain, and you will have had like this kind of mechanism where like people are buying your debt. Instead, like the digital euro is gonna be like basically some sort of, as most of you here are Italian, it's gonna be like Satispay. So it will be distributed by banks, and it will be like a digital euro wallet. And I think that's still important because if you think about Europe, we don't have any payment network. Like there is Visa and there is MasterCard, and both of them, they're Americans. So we figured out as Europeans, we wanted to do like, something that at least from that strategic standpoint will protect us, from any kind of political situation, because payments, they're super important. You cannot run. If anything happens, you need to have your own, I think, local payment rails. So like in short, I think they didn't pick up because there isn't the right environment today. Like it's still super tough. I think Mika is not really going to help. You can only issue stablecoins if you use European banks, which today is a challenge to most of the players that you see there. But still, like someone is gonna do it because I'm seeing some projects, but again, it's gonna be like really tough. I think like Gabriele said, once you go public, you get like kind of the confidence. And I think in Europe, we don't have the same financial savviness that it's in the US. So it's gonna take like much longer, in my opinion, or we will have, American issuers even succeed here, and they will use European banks. So yeah, we will have Euro stablecoins, but today, like the environment is not the best.
So what if Revolut launched a stablecoin?
Actually, it was in the rumors,
Yeah.
but it was, for example, even that was immediately stopped. Because I don't think there is like, again, this mindset is seen like as a challenge to euros. Instead, like even I think one of the minister of, like someone really high up in the treasury of the United States said that stablecoins will be used to, preserve the US dollar as the global currency. So for them, it is very clear in their mind that stablecoins, they are a tool, first, to have buyers of their debt, second, to export dollars. In Europe, they're seen as something, hostile. Whereas like it's a form of, private money but still backed on euros. So for me, it's a bit absurd.
I agree. Do you think a challenge is also because euros are used throughout Europe, throughout the whole union, and like most countries don't have their own currency, and like you saw, Great Britain wanted to maintain their own currency. Do you think that's a blocker?
I mean, partially maybe yes, but I think just like around blockchain, there isn't like the same kind of a hype and openness that you have in the United States.
Yeah.
And I think, the dollar always has like some sort of inherent advantage, because when everyone wants to use you, then most of the innovation will happen there naturally. And then you basically have the opportunity to say, okay, do I welcome this innovation or do I reject it? But instead, as euros are a challenger currency, you need to make things happen. Nobody's going, like right now.
You need to move faster.
Yeah, and right now that stable coins are something like legit, then people are starting to look it up, right? But we will always be late, because if you are not the global currency reserve, you will always be late. And the same will be in emerging countries. And some of them, like I'm like, for example, very bullish on BRZ, like, you know, some Brazilian real stablecoins. They have like decent liquidity, they're using them, but that's like more of the intuition of someone, you know, copying like a model somewhere else. So I think it's kind of, you know, easier. It's been easier for the US.
Gentlemen, if I may, because I think we'll need to wrap up soon. So I think with like the last topic, I think, which very nicely composes with the rest, right? Because we've covered how we had this trend of like soft power and re-dollarization of the global economy thanks to stables. And initially, gentlemen mentioned that there is this savings layer, right? And this savings layer also has seen the proliferation of the stable coins bearing yield, or various assets calling themselves yield-bearing stables. And the question is, what are they, right? What are they even? And are they some kind of like Trojan horse to even speed up the process of like global dollarization? So I think let's kick off with Emanuele. What are your thoughts about this phenomenon?
I'll chime in. Before Anchorage, I used to work for a stablecoin issuer called Mountain Protocol. We actually brought to market the first regulated, permissionless, yield-bearing stablecoin. And the idea behind it was very simple. Tether, Circle, stablecoins democratize access to the dollar. Through our product, we wanted to democratize access to the dollar and to the risk-free rate, the savings rate of the United States government. Ideologically, it's a fantastic product, and I think it's something that it's needed for sure in the world. Realistically, it's become quite clear with stablecoin regulation both in Europe and in the United States that yield-bearing stablecoins are not going to be supported and really legally allowed as payment tokens and assets that can be used at scale to move value and really save as well, at least in developed economies. There must be a decoupling of the yield from the payment token itself. Otherwise, again, the product is considered a security. So these products are not going to be allowed in, right now, the United States, in Europe under MiCA. There is space for them in emerging markets and in some offshore jurisdictions, but stablecoins are a game of scale and of distributions. You need these key markets in order to win, essentially. So where are we when it comes to yield-bearing stablecoins today? Well, there is two buckets, regulated products. These are effectively tokenized securities. Think about a money market fund that is tokenized, brought on the blockchain. It's still a security. The ledger and the registries, let's say, where these assets are traveled, though, are the actual blockchain rails. So tokenized securities will be one bucket of products that are going to be allowed in these regimes. And the second is what I would call unregulated DeFi native type of products. And here we're looking at assets like Ethena. I don't know if you've heard of any of this type of product, or a product like USDS, by Sky, X, MakerDAO. Again, these are effectively DeFi native products that have the ability to pay yield through a variety of geographical and regulatory type of arbitrages. But again, in developed markets, and this is going to be very likely the future in the new financial system that works on blockchain rails, you're not going to have payment tokens that pay yield. There is always going to be some integration or interaction where a payment token moves into a savings account or in a treasury type of products, again, programmatically, atomically to the blockchain, but the yield and the payment token are going to have to be separate.
Perfect. Thank you so much, gentlemen. So unfortunately, we'll have to wrap up. David, the next time we'll need like 2 hours, I think, because it looks like it's been like very, very fun to talk. Gents, any last remarks, like one sentence each? What are we going to see in the next 2 years for stables?
Okay, I'm going to do a clickbait line. So stable coins are to money what WhatsApp was to SMS.
Thank you.
Thanks, Sergio.
No, on our side at Hercle, we are really focused in the market. We're really excited to see where it's going and excited to see the volumes pick up. As Gabriele said before, education is needed, but education is happening, especially through the other, they're not even clickbaits, but all of the major announcements with the IPOs, with the acquisitions and everything. I think it puts a really nice spotlight on the market and on the real usability of blockchain and stablecoins, which is it's something we're very happy to see. So yeah, excited to educate and see where the market goes from here.
I would say like this is like crypto and blockchain finding a product market fit. Finally, we did it. It took us like I don't know how many years.
15 years.
And 15 years. So we found PMF, and now we have to talk to the real world. So everything we built is great. It works in a closed system, like iOS, Apple, blah blah. But then banks today, I think they are still using FTP, to move like money around. So we have to build now the connection between blockchain and the real world, and that's going to take a lot of time because a lot of financial institution, banks, etc. They run like on super old systems, and so this transition is what's going to make stablecoin widely adopted, and at the end of the day, they will become. Nobody will talk about stablecoins. It will just be money. Like crypto and money will become the same thing. Like there will be no difference.
What's your closing remark?
I think people in crypto have a tendency to dislike regulation and just governments. The reality is that to get to the WhatsApp of money, there is going to be significant government buy-in, regulatory buy-in, and the future for this type of technology, it's a regulated one in my view. There's going to be space, of course, for crypto, Bitcoin, this technology and assets that we love, but to really take this tech to the next step, we're going to need regulatory support, and it's all going to be about trust and regulated counterparts.
Perfect. Thank you so much. Thank you once again. So please, round of applause for the guests.